How are you?
Hey man, I'm good. I'm glad to see you're in the festive spirit.
I am ready.
It took
You
it
got a
took you a while
comment
to
ready
get
to go.
it took you a while to get that all decorated, didn't it? Nice job.
Thank you. Thank you. All right,
Yeah, it
we're at
looks
that
good.
fun time of the year, right?
It is. It's always kind of exciting just to see what's going to happen, and it was a pleasant surprise.
Every year, they just keep going up. These loan limits. This is a pretty big leap, partially
It,
because values have exploded in the last couple of years.
yep. Values have
Initial,
jumped, income has jumped. Everything is trending in a direction. So it's not just what homes are selling for, but it's a bunch of factors in there where the loan governing bodies decide that they're going to adjust the loan limits for certain programs. And it was sizable.
that's awesome. I had a slide here. Now I
I
can't
got it.
find it. I knew you would have it.
I,
Saving the
I,
day.
I got you covered, bro. I got you covered.
All right. So for those of you that don't know, conventional loan limits, when you go above this number, you move into what's called the jumbo category. And jumbo is a completely different underwriting. That's the biggest difference between conventional FHA, our computer underwritten. When you go into jumbo, it's manually underwritten by a human.
Correct. It's far less standardized. So jumbo loans are more specific to the appetite of the person that wants to buy that loan as a security or the investor, where the conforming loans, it is incredibly generic. The rules are crystal clear. The process is streamlined. Like you said, a lot of automation in there. The difference in getting an approval on a conventional loan versus a jumbo loan, it could be a third of the time, possibly. So it's a big deal.
Less documentation, increases the speed at which it can move through the system, less questions from underwriters as they're reviewing. Are you meeting the terms of the digital approval or not?
Oh, totally.
But yeah, so why is this so important? Looking at 2023, what's your first take on why this is such a big deal?
It's first time home buyers is the thing that jumps off the page at me. With home values going up, obviously that's a massive loan amount, $726,000. But what that does is that now means you can borrow that amount of money with less than a 15 or a 10% down payment. So conventional loans, and again, first time home buyers, you could put as little as 3% down and borrow that much money. Again, that's a big number, but if you have professional people with incomes that can support that, it's a big deal, especially in the Sarasota, or where we're at in Florida, and where we're out here in Arizona as well. That's a big deal. Michigan, it's kind of cool, but I don't think it's as significant as the other two markets that we do a lot of business in.
All right, so first-time home buyers, to help with their affordability factors, less down, not moving into a jumbo category. But what about our current homeowners, our people who are sitting on all this equity?
Yeah, that's probably even more important now, right? As rates continue to come down and home improvements and the ability to access equity with a cash out refinance, that's a big deal. So again, if you borrowed 600,000 a year ago, or 2 years ago, now you've got the ability to access $100,000 or $126,000 for whatever purpose you deem, but probably most significantly, it's going to be to improve your home.
I think that is going to be a huge deal, because folks that are sitting in their 3% mortgage and are staying put, as we move into the latter parts of 2023, we believe that rates are going to get back into the 4% range. And we also know that, the home that you're in isn't getting any younger, right? It always needs improvements. So roof, windows, kitchen remodel, bathroom remodel. These things
Well,
are
and
big
again,
ticket items.
where you're at in Florida, the amount of sun, you've always got painting the exterior of the home that you kind of omit. That's a big ticket item. Air conditioners are big for down in Florida and out here in AZ. So all kinds of things that can come up, not to mention just the maybe the remodel aspect of it, but just maintenance.
Everybody went out and got a home equity line of credit this year because it made sense.
Yes.
We're not sure how long that's going to make sense, but what we are sure of, the numbers will tell us when it makes sense for you to make some adjustments depending on the funds that are needed for some of these home repairs, home improvements, etc. So when you see the FHA number down there, again, this is important for not only first-time home buyers, but for cash outs as well. People
Correct.
with lower credit scores that need to access some of this money that maybe can't get approved for a home equity line of credit.
That's so true. We continue to read that the savings rate, people that the general consumers amount that they have saved, that amount has started to decline somewhat substantially in the last 6 months. We also continue to follow along with credit card balances. Those continue to increase. So, it's always been fascinating for me of how people can overlook or ignore the 18 to 20% that they're paying on credit cards, and not consider accessing some of the equity in your home to make that more affordable with the interest rate that you're paying, as well as the cash flow required. And then the emotional part that says, hey, I'm debt free other than my mortgage. So you're spot on.
All right. So we like to work in knowns, and we like to have the numbers speak for themselves. Hence why we've done close to 0 refinances over the last 6 months. It just hasn't made sense. Now, as people stay put and we go into minor recession, let's take the middle ground, right?
Yep.
Hopefully it's not a horrible one. We believe it's going to be one of some sort. So I always like to think back to the 79, 80, 81, 82 recession. That's when I was a kid. But this is one of those things that became popular back then. Was we have divorce situations that happen as people start squabbling over money or lack thereof it. And we have equity in the homes right now that just wasn't the case in 07, 08, 09, 10. There was no equity in the homes. This one's completely different.
It's true. Or it was a bad joke at the time, but people couldn't afford to get divorced back then because they couldn't figure out how to bring money to the table to sell their home. So you're absolutely correct. There are things that come up that may drive the need for a refinance that people don't generally think of, or it's not just a matter of the interest rate going down from the mortgage you have now to the rates going down to the new mortgage. That isn't always the reason why people refinance.
Have you had to redo your air conditioner out there? Sidebar question.
I have not.
Okay. Any idea out there, a new unit? Is it 10 grand?
It's at least 10. And then it just depends on the size of the home, but smaller.
Some people have 2, right?
Yes. You're anywhere from 8 to 20.
Okay. I know these tile roofs in Florida. Oof, those are, I want to say 30. Shingle roofs in some of the other areas are a little less expensive now. Furnaces, gosh, don't know what those are, but then windows are outrageous. Just probably the most expensive we've ever seen, right?
I would agree.
Okay, so these are the things that people tend to put off or not think about. And while you have good equity in the home, we want to help run through all those scenarios with you. We're not saying that we want you to do anything. We want you to start the conversation, get it up on the table so we can figure out what's the most effective way to attack some of these big ticket items, because not many folks are going to have, 30 to 50 grand laying around to do these home improvements without it greatly affecting the way they go through their day-to-day life.
It's well said. And again, when we come out of interest rates that were abnormally low, psychologically, people want to hang on to that as long as you can, which totally makes sense. But that's where some of the information that we
They
can
do.
share is a perspective to look at it 1, 2, or 3 different ways to make sure that you're trying to minimize your cost, but also find something that suits you emotionally or psychologically and is easy to administer. And a lot of folks we talk to, they kind of want it out of sight, out of mind, and get it so that they can pay attention to other things. We have some things that we can do there to simplify that or make it more agreeable.
This is a off the wall question, but I want to get your opinion. So when a consumer's credit card hits a certain number or high balance, is there like a point of no return where they just can't or don't want to pay it off, and they will allow it to go, 5 to 6 to 7 to 8 grand, and they'll let that linger on for a while? Or, is it 2 grand they're comfortable with and they can pay off every month? I'm just trying to get a feel for what you think there's a number where there's no way I can knock this thing out anymore.
Gosh, I've seen so many different sets of that number, but I think it's just managing the payment, and in general, don't associate the balance as being disturbing. So typically when I've seen people that say, hey, this credit card now is at a spot where I can't manage it anymore, it's usually something else going on within the budget that's changed, that's forcing them to look at it, because they can put it out of sight, out of mind, super easy.
Okay.
I know people with folks of credit card balances of 10 grand, if they've got 10,000 bucks in the bank, they don't think there's a problem carrying the $10,000 credit card balance. So it's disproportionate. It's super easy for the general consumer to ignore how much interest they're paying on their credit card and not become obsessed with getting it down to 0. I don't know what that number is.
I'm thinking of the home improvements that we were talking about and trying to correlate all of this. So when an event happens, the AC blows, and you got to come up with 10 to 15 grand quickly. How do you do that? Where do you pull it from? Are you staying out ahead of these repairs, or are you always chasing your tail, just trying to, for example, you had mentioned exterior paint. Have you had your house painted in the last 4, 5, 6 years? If you haven't, you need to. Period. End of story.
Right.
So all of these things are coming. We don't talk about them enough. We're trying to get them up on the table because right now homeowners have equity. And I would really love to see them keep their homes tight in case they are forced to sell for
whatever reason,
an unknown reason, job loss, divorce, etc. So very, very important stuff.
It is. I know that at least the HVAC contractors, they do have credit options that they make it super easy for you on that side. On the painting side, I'm not as familiar with that, but again, there's opportunities to get it done and handle it without much forethought. That does not mean that it's agreeable with the interest rate or the payment requirements, though. So back to your point of getting ahead of it, we've discussed the home equity lines of credit a ton.
Yeah.
Right now, they're fantastic.
Yep.
Because it allows you to maintain a lower interest rate on your primary mortgage It allows you to have access to money to prepare. It's still a reasonable interest rate. Those are great things to be thinking of to
We're
get
just
ready.
trying to get everybody to get ready, because it's coming.
Yes, that adage, it's always easier to borrow money when you don't need it than when you do need it. And
All right.
right now with the
good
holiday
stuff.
season, it's tough to carve out some time to think about that, but that's the challenge that we have for you guys.
Well, and you don't want to wait till January when the bills start rolling in from your holiday cheer that you're in the middle of.
That's right. Exactly. Avoid the hangover I think is what you're saying.
That's right. All right. Great stuff today. Appreciate it. We will catch up next week.
Ditto. See ya.
Thanks. Bye.